Can your retirement survive a hurricane? No, you're thinking figuratively a hurricane. No, I'm saying literally. Can your retirement survive Murphy's Law or a hurricane? So I'm coming to you right now. It looks beautiful. I'm actually coming to you from Cape Coral, Southwest Cape Coral, in Florida. I actually drove over yesterday to help my folks clean up from the hurricane. I'm going to take you on a really quick tour, and you can actually see behind me. This is their dock. It's weird to do it at this angle, but see that this is my parents' dock, and I'm going to walk backwards and try not to fall into the water here. But then also, if you notice that pretty cool boat, it's a Hurricane right behind me. Look closely. It's not on the dock. It's actually, it came up, it's on the land right there. Check that out. It's absolutely crazy. And it doesn't belong to the neighbor. It's somebody who rented the dock. So who knows who's going to pay for that. And then the water level, just so you can see, it looks very peaceful and serene on this canal right now. But the water level actually came up. It flooded over the neighbor's pool. So their house had some flooding damage. This is my parents' house. Their pool's just a little bit higher. So they didn't get any flooding. But you can see the roof got torn up and the lanai got all screwed up. Anyway, so this is what I've been doing. This is why I probably look pretty sweaty right now, because I am sweaty. I am very sweaty. Moving a whole bunch of stuff for them. But anyway, the point of this video is not so much showing Cape Coral. It's asking the, I don't know, maybe rhetorical, maybe less rhetorical now, question of, if Murphy's Law happens, it doesn't have to be a hurricane literally like this, but it could be medical bills, it could be your kids needing help, it could be the market crashing as it's unfortunately doing right now. Inflation's at an all-time high. Your investments, if you're invested in the market, you're either not looking at it or you're looking at it and cringing, and you might not be able to sleep too well at night. I'm going to turn this way so the sun isn't in my eyes so much, and you can see some more of the trees and the destruction and stuff. It's a serious question, because a lot of the folks that I work with in my little reverse mortgage world, they're planners, they're investors. They did everything that they thought they could possibly do. Oh, that's my doggy Lucky barking in there. They did everything that they thought that they could do to prepare themselves for retirement. And then this happens. Southwest Cape Coral, well, heck, Cape Coral actually didn't get it as bad as Fort Myers. Fort Myers Beach is still, I don't think you can get out there. Pine Island, Sanibel Island. And now if you're in California, you probably know what Sanibel Island is, but if you just Google the destruction that happened here, it's just, it's disgusting. So even though these folks, like my parents, and Cape Coral is a big retirement community too, just like a lot of Southwest Florida, a lot of California, a lot of areas, even though they prepared this, hopefully the insurance, they've got homeowners insurance, so hopefully it covers it, but they've got a lot more expenses. And there's folks, they got off lucky. The folks on Sanibel, they lost their homes. So no matter what, they're still up against it. So financially, again, my question is, do you have everything set? So if something like this happens, whether it's a hurricane or a tornado, an earthquake in California, or again, just more of a figurative thing, the market dropping, are your assets going to survive a disaster like this? I know I sound really dramatic, but this is exactly what's happening, again, to my folks and the folks in Cape Coral and in Lee County, but then also to millions of seniors who are, and you might be one of them, who've just they've saved up their whole lives, they've invested, and now they're relying on these assets, and now the assets have dropped. I mean, this is October 2022, and they've dropped, God knows, depending on what you're in, maybe 40%. Can you still live the same in retirement? Are you worried that your retirement might, the worst thing possible is if it won't last, you'll be out of money. The second worst possible is that you have to change up your kind of what you're used to, your habits. A lot of people say retirement is the golden age, and you want it to be gold. So this is a long-winded way of, actually I'm going to show you this grill because my dad and I were working on it earlier. They actually found it in their pool after they evacuated Cape Coral, and they came over to stay with us in West Palm Beach. But this is their pool right here. This is my dad working on the pool right now. This grill right over here, hopefully you can see it. They found the grill in the pool. This is it's a pretty big thing here. This is not a tiny grill. 140 mile per hour winds will do that to you. It's pretty out of control. I'll show you the street real quick. But so if your answer to the question is, hey, Jason, I've got plenty of money. I've got, a few million in the bank after this crash. I'm okay. Well, then you're in great shape, and you can probably turn this video off. You can use your home equity to feel more stable, but you're not really who I'm talking to. The folks that I'm talking to are the folks who, look at this street right here. Just every single street or every single house has just stuff, vegetation, foliage. Look at those trees right there. Like, those are palm trees. The whole tops of the palm came down. It flooded right to about where the garage is, right there, which is 7 feet up from canal level. This house down here has a tarp on its roof, and I think the tarp was pretty poorly done. Okay, so back to you. If excuse me, frog in my throat. If you are concerned that, hey, maybe in this world, in this environment, with the market the way it is, and the unforeseens too, Murphy's Law normally doesn't happen when you want it to. Murphy's Law happens when you're unprepared, or when you damn well don't want it to happen. Not that you'd ever want it, but it normally comes at inconvenient times. If you're in a position where your assets, you're afraid your assets might not last, your 401k, your IRA, your stocks, maybe you've got that mortgage payment, and it's keeping you up at night, it's uncomfortable, then you've got to think about using your home equity. Now, right now in this world, even though the market's kind of peaked and it's dropping a little bit, home equity is still just about at all-time highs. So we have a market that's crashing, that's, been done and crashed, and probably will be crashing more. And you've got home equity that's just, again, at all-time highs. So the question is, what would you take from? Do you want to save the funds that you do have in the market? Just turned around here. You can see the tarp on that house right now. Do you need to save the funds that you do have in the market? Would taking more of them to survive not only deplete them more, but are you going to get taxed more as well? If that answer is yes, then looking at home equity, if you have a lot of equity in your house, yes, you could get a home equity line of credit. That's possible, but a lot of times you don't want to saddle yourself up with another payment. And I've seen HELOC rates over right about 10% these days. Not really good. And plus HELOCs, they only last for X amount of time and they can get called. So it's a very imperfect solution. I mean, nothing's a perfect solution except for Powerball. You all understand that. But Powerball is kind of hard to get. But if you do a reverse mortgage, and I've helped over 460 seniors now learn about and get reverses since 2008. It's a safe way to use some of the home equity, some of your home's equity. You don't get the whole thing. Even if you wanted it, they don't give you the whole value of your house. They just give you some money in tax-free cash based on your age. The older you are, the more you get. The younger you are, the less you get. If you're young, this is pretty neat. Not a lot of people understand how this works. I should do a separate video of really dialing down into the numbers. But if you're young enough, you can actually do a reverse mortgage line of credit. And the reverse mortgage line of credit is pretty neat. The money that stays in the line of credit, if you don't touch it, number one, it doesn't accrue interest, but you don't have to make payments on it. So, that's not the biggest point. But the biggest point about it is when you leave the money in the reverse mortgage line of credit, again, just saving it. I like to think about it, and the financial advisors that I work with, they think about this as a retirement safety net. That means you're just opening up a side bucket of money that you can use if you need to. If this stuff happens, if Cape Coral happens to you, right? Or if the market's down like it is now, you take your money out of this instead of taking the money out of the market when it's down. That's what smart people do. But anyway, the point is, this money that's in the line of credit, it will actually grow tax-free, and every single year it'll grow. And this is crazy, but I guess it's not crazy because I've done lots of them, but it might sound crazy to you. The more money you leave in the line of credit, obviously the longer it grows. So you're almost rewarded to not take the money. Now, obviously it's yours, so if you need to, go ahead and take it. But the other thing is that as interest rates go up, the line of credit growth stays the same. So I was looking at, normally don't like talking like interest rate numbers because they can always change, and I don't know when you're watching this video, but I was looking at a client who we just closed last week. Her main purpose of doing this was she had a couple bills to pay off. She had a HELOC actually that reset, so it was charging her more money, so her cash flow was going to get tighter, but she wanted the line of credit for the most part. So we set up the line of credit, and right now, the way rates are, it's growing at 7.4% tax-free. 7.4. That's a fairly okay number right there. And then what we do expect the Fed's they're gonna raise interest rates, we think 75 basis points in November, and we think 50 basis points in December. So that means all of these rates are going to continue to go up. We know that house values are gonna go down. Won't be a massive crash, but it'll be slight. But as the rates get higher, the line of credit will grow stronger and faster and bigger. And the reverse mortgage line of credit, it doesn't run out. And the bank can never tell you, this has grown a lot, we want our money back. Or, hey, you know what? Your line of credit's so big and your house value's dropped, you can't take anymore. That's not possible. You have the right, and actually financial advisors call it this. We call it the ruthless method. Because if property values drop, you've got your reverse mortgage line of credit locked in, you can ruthlessly you can take more than your home's value out if it's done the right way. And there's a lot of things you got to do on the back end to get it done the right way. Anyway, so this is my little tour through Cape Coral. I hope it makes sense. I never thought I'd be taking you by my mom and dad's house, but just here kind of helping them. Again, I'm pretty sweaty, but it's a good thing to do. They're in their 70s, and it's kind of tough for them to move stuff. So it's Sunday, might as well help. Very glad to help. So in your case though, if you want to protect yourself against, now I'll say figuratively, against a hurricane. Now it sounds very dramatic, but if you're worried about not having that buffer or that safety net just in case something crazy like this happens, or again, it could be medical bills, it could be something else, or if you just see your investments dropping and your financial advisor, this is like the worst phone call you can possibly get, or one of them, if your financial advisor calls you and says, hey, we gotta have a conversation. The way your investments are right now, and at the rate you're taking them, if things continue the same way, I'm gonna move away from here. Somebody's doing some pretty big work over there. If things keep going the same way, and your investments keep dropping and you take them because you need to, or maybe you have your RMDs, your money's gonna run out. And it's likely that it's gonna run out before you run out. That's scary, and that keeps my clients up at night. And so that's why I do everything I possibly can to help them. Now, obviously, it's you only have so much home equity, and everything is a case by case. And I don't know if you can qualify for a reverse. I don't know if a reverse is the right thing for you. But if you are concerned, the smartest thing to do is to have a conversation. And I'd be more than happy to help, more than happy to kind of give you the high level of how this works and the granular level of how it'll work exactly for you. So if you'd like to do that, my name again is Jason Eichmiller. I run Reverse Mortgage Reality, this channel. You can go ahead, my contact information will be somewhere below here, but you can reach me. There's more chainsaws going on. You can reach me at 888, this is a phone number, 888-309-9705. Jason@keyhomelending.com. Again, that email address will be right below. And if you just want to go visit my website and just input your, look at some testimonials, some other seniors who've gotten reverse mortgages, what they have to thank, then go to my website, reversequotes.com. You'll be able to put your information in and we can schedule a time to chat. So again, thank you so much. This is actually a good break because as soon as I'm done this, I'm going right back inside to help my folks move more stuff. So my muscles kind of needed this anyway. So again, thank you for your time. Thank you for your attention. I wish you absolutely the very, very best. Take care of yourself.